We call this a chokehold, okay? And that's where developer then becomes land hungry, government's not releasing land, and what do? The only option left is by way of en-bloc. So very important here, I want you to take down this golden nugget here. These two combinations will give you an en-bloc. So topic number one, we'll be touching on en-bloc cycle, learning from the past, projecting the future. So over here, as you can see, the title suggests impact of major property cooling measures. And this article itself is actually derived from Straits Times in first quarter 2020 last year. So this is a historical timestamp of 25 years from year 95 all the way to year 2020. Okay, so on the left side of the chart over here, on the left axis, you will see 0 to 160, and this is measured by the URA price indexes only for non-landed private homes. Okay, so how are these indexes being measured to? Is measured by three different buying behaviors. Firstly, new home sales, buying directly from the developer. Second, resale, buying from the open market. Thirdly, sub-sale, buying from someone else that bought from the developer directly within first year of TOP and before. Right? We then talk about the three different so-called tenures: freehold, 999, 999, and the three different regions: core central region, rest of central region, outside central region, and then the development sizes as well, from 500 and below, 500 to 1,000, and 1,000 and beyond. And that's where we get this wave that we see that indicates the price indexes that flows throughout the chart. All right. And on the right side of the chart, what we have here is from 0, 5, 10, 15,000, and these are the transaction volume measured. Okay. And in light blue illustrates the new homes, and dark gray shows resale, and light gray shows sub-sale. Okay. So as the title suggests, impact on major property cooling measures. So this entire graph is cooling measure sensitive. Okay. So at the top here, all the gray boxes that you see are actually self-inflicted cooling measures by way of government intervention. If you realize these cooling measures were also introduced when our property market was bullish and our economy was also thriving. Okay, so the first one what we have is May 1996, where we have the anti-speculation measures. Followed by the next one that we have is 2006, we have the introduction of qualifying certification. And this is mainly targeted at developers to stop them from land banking hoarding. Okay. And the third one we have spans over a period of 4 years from September 2009 all the way to June 2013, when the most damaging cooling measures called the total debt servicing ratio was introduced. All right. And then the last one we have is the 5th of July 2018, where we have ABSD raised by 5 percentage points and also loan to value dropped from 80% to 75%. All right. At the bottom itself, the gray boxes shows external shocks, global shocks that basically rock the market. So at the bottom, basically runs by three main factors. First is either crisis, pandemic, or if not, what we have is going to war. It could be a physical war, or if not, financial war. All right. So most importantly, over here at Savvy Investors, we want to denote what actually creates a bear market, not how the market can be speculated and how bullish it is. So again, in order to find out the bearish market hearsay, that's what I hear outside, that prices went downtrend is because mostly by way of government cooling measures. Over here, I want to debunk that myth and share with you it's not the case. Mainly is driven by external shocks. So the first one that we have is actually the Asian financial crisis that happens from year 1997 to 98. All right. The second one we have is actually from 2001 all the way to 2003. We have the 9/11 that happened, that US goes to war with Iraq, and also the SARS that happens in 2003. The third one is in 2008, where we actually have the global financial crisis that spans all the way to third quarter 2009. And then the fourth one started from year 14 because of the technical recession, where oil prices dropped below $50 USD per barrel, and also OPEC was formed as well, all the way to Brexit and also US-China trade war. And then the fifth one, what we have is actually the COVID-19 situation, which is the pandemic that we are facing ongoing right now. And very interestingly, the very first en-bloc that we see, okay, in the good old days, the very first wave was actually between 2005 to 2007. And to share with you, this is a time where very prominent development was actually created. Okay, so to give you some illustration, we talk about Gilman Heights, that was en-bloc and then becomes today the Interlace. And also we talk about Farrer Court, which is today's Dividend as well. These were development that was en-bloc during this period of time. Okay, and to share, whenever an en-bloc happens, for example, 100 units development, developer will never build back the same size on the same plot of land because it doesn't make business sense. So on the rule of thumb over here, to give you some insights, we will always build back 3 times more. So if it's 100 units development that went through an en-bloc during the period, there will be 300 to be replenished back on the same plot of land. So in these instances, to share between 05 to 07, there was close to 22,000 units that went en-bloc. So potentially we see a 66,000 units to be replenished back to the market. But we did not replenish the very following year because why? We were hit by the recession. Okay, so developer held on to the 66,000 and only replenished them on the following year. In fact, in fourth quarter 09, right? So once the 66,000 were replenished over that period of time in fourth quarter 09, we see that drive the market over 3 years by 62 percentage points over a span of 17 quarters. 17 quarters is 4 years, 1 quarter. And this resulted the government to introduce cooling measures. And how many sets? 8 sets of cooling measures just over a span of 4 years, 09 all the way to June 2030. All right. And at that point, when the cooling measures were introduced, we were then left with close to 40,000 inventory left in the fourth quarter 2013. And then at the same time, we were jointly hit with the technical recession, and government decided to clamp down on the number of land sales. All right, this is to actually to stop future supply coming on board because of the already subdued market with 40,000 inventory left. Okay, we were then absorbing at about 9,000 homes year on year for the next 3 years, and then we were left with 20,000 inventory left as of third quarter 2016. So what triggered a lot of people thoughts is that how come another en-bloc actually came on board in year 16? Okay, so guys, to share with you, whenever an en-bloc were to take place, it takes about 1 year, 9 months for the developer to fully, again, do an acquisition on the land to finally launching the product for sale. So it takes about 1 year, 9 months transit time. Okay, and to share that we learned in 2016 September we have 20,000 inventory, and noting that we were transacting 9,000 new homes year on year, if developer were not to take action to do an en-bloc in 2016, they will not have any more inventory left in 2018 because government has clamped down the government land sales. So guys, to share with you, whenever there's a tightening of government land sales in conjunction with the remaining inventory to be less than 20,000 inventory, we call this a chokehold. Okay, and that's where developer then becomes land hungry. Government's not releasing land, and what do? The only option left is by way of en-bloc. So very important here, I want you to take down this golden nugget here. These two combinations will give you an en-bloc. And of course, moving ahead, the replenishment from these 3 years of en-bloc from 16 to 18 created the market to shoot up again by 12 percentage points, and that is what resulted that cooling measures to happen on the 5th of July 2018 as well. Okay. And then we then look at the number of inventory left in fourth quarter 2020 was close to 27,000 inventory. But guess what? Government again introduced the chokehold. Government cuts private housing supply from confirmed land sales side due to the COVID-19 fallout. And when is this? 24th of June 2020. And right now, if you know that we are again probably absorbing new homes at now 9,000 on a year-on-year basis. In year 2021, we will likely have the en-bloc, and that is exactly what's happening today, guys. Okay, so again, today's what I shared with you just now is to really determine where the market is heading, given the supply and of course the different factors that create an en-bloc. So this chart here shows a 10-year cycle stem from year 2010 all the way to third quarter 2020, and this chart shows the unsold inventory and supply. So we learned just now that we have about 40,000 inventory in 2013, followed by unsold units of 20,000 in 2016 September. And then en-bloc happens for the next 3 years. So collective sales figure were at all-time high between mid-2017 to end 2017. And we actually have 3 collective sales done in just 2 days, okay, in December 2017. And to share, these are the 3 developments. Firstly, Vista Park, that was sold for 418 million, and that is today's Kent Hill. And then we have Parkway Mansion that was sold for 147 million, and this is today's Coastline Residences. And then we also have Derby Court that was sold for 73.8 million, and this is today's 5 Derbyshire. So again, unsold inventory were all-time low at 16,000 only as of third quarter 2017, and that's what triggered these three so-called en-bloc collective sale. And most importantly, the replenishment that pushed out the market again due to this en-bloc movement. And what we want to know is that as of Q3 2020, we actually have 26,600 inventory left unsold. And market projects that it takes about 3 to 3.5 years to fully absorb these numbers of inventory. So again, we want to know that this is actually a statistic from Statista, which is again all about statistic only from the website. It suggests that they projected by year 2021 there will be 9,500 homes to be absorbed. Okay, so again, this is an article based on Channel News Asia on fourth quarter 2020 last year. So what he shared is that again, they mentioned the number of inventory left in third quarter was 26,600, and we learned that the previous en-bloc was actually in second quarter 2016, where inventory fell to as low as 23,300 units. So this marker will then sort of serve as a benchmark to the point where developer will start looking for land. All right, so guys, get some insights over here because the number is very important, and also what is the chokehold that created this thing. So next thing over here, we want to know that again, en-bloc started in 2021 already, and that chokehold, which is combination of government land sales tightening and less than 20,000 inventory. We then, as of today, Q2 2021, we are left with less than 20,000 inventory. In fact, we are at 19,000 plus. Okay, and then it takes about 9 months to complete the back and forth to broker an en-bloc, and then it takes about another year to proceed with the necessary URA so-called approval, okay, and also the BCA approval for building approval plan to finally launch the product. All right, so if you look at the timestamp here, if en-bloc is going to take place in 2021, it's going to last until 2023. And then the replenishment will take place when? 2023 all the way to 2025. So the next uptick that we're going to see is actually from 2023 onwards to 2025. And probably a cooling measures will come in around 2025 plus minus. Okay? So the last time when we saw an en-bloc frenzy was developer buying by way of FOMO, okay, and that was in 2017. Okay, so over here we saw that the last time round in 2017 when this happened, okay, en-bloc was happening and government land sale was also releasing as well. We see that Sterling Wood itself was tendered for $1 billion in Queenstown. We saw SPH and Kajima bidded $1.132 billion for the Bidadari site, which is of course today's Woodley residence, and there was 12 bidders. And we talk about Serangoon North Avenue 1, which is the Affinity, got basically bidded by 16 bidders and sold for $446 million. All right, and then what happens in today's market? The possible revival of the en-bloc in 2021. All right, as developers start replenish land bank. So over here we saw that there will be a possible increase in land prices. That's the implication, and this is what happens. So Tanah Merah site basically got bidded at 15 bidders, okay, which is very crazy because on a normal scale, just to give you some idea and reference point, we should be seeing about 7-8 bidders per plot. But when the market is bullish, we see 10, we see 12, we see 15. And again, when there's more bidders, it equates to what? Higher selling price. And of course, with higher selling price, it equates to higher consumer buy price. Okay? So very importantly, Ang-Mo-Kio as well, we see 15 bidders that goes up to 1,118 PSF, and this was this year May. And of course, 2 land parcel and 1 North Slim Barrack Rise fetch 10 bids each, parcel A and B. And of course, we talk about the Lentor site as well, smash record prices, and even the Farrer Park residential site by MCL. Okay, so next thing we then talk about en-bloc version 2.0. Just in the last 1 month, what happened? All right, Chuan Park going for en-bloc sale for 938 million, and they already put it out in the market. They got 80% approval. We have King Leong buys a successful en-bloc of 21 innocent en-bloc for 213 million. A Far East consortium, because Far East coming back as well. And then we also have Walton Estate Condominium up for collective sale with 500 million minimum price bid. And also International Plaza launches largest recorded en-bloc tender at 2.7 billion.